Do you want to know what happened in the market through the end of August? Tune into Tom's Take right now. You're definitely going to want to watch this one. So we know the biggest question that people have, more so than ever, but this has always been the case, is how's the market doing? So I wanted to give you a breakdown of what happened in the month of August in the greater Philadelphia area, and then what that means for buyers and for sellers as we head into that final quarter of the year. We're only a few days away from the end of the third quarter, so a really good time to kind of evaluate what the indicators are as we move into the last segment of the year. So through August, year to date, we saw pricing increase year over year between 6.9 up to 9.2% on the median. So big jumps in the median sale price in our local market. And this is for Montgomery, Delaware, Chester counties, as well as the city of Philadelphia. The number of sales are down. We know this. There was a shutdown. We couldn't show properties for 60 days. Number of sales are down between 7.8 to 12.3%. So a pretty significant decrease there. Days on market is ranging between 29 and 37 days on market when your home goes active and starts showing until a contract is signed. And to give you an idea, that's about a zero change when you look at the year-to-date numbers. That was for the month of August, 29 to 37. Year-to-date, the range is 39 to 48. So obviously, that's going to change because we had that 60-day shutdown in there, and that was a component that gets into that calculation. Sellers are getting between 95.4 to 98% of their asking price at the time the home goes under contract year-to-date. And some key trends here I wanted to identify with you. Everywhere except the city of Philadelphia, pending sales are still outpacing new listings. To give you an idea, for the whole metro area, not including Bucks and Berks, we've seen 5,366 new homes come on the market in the month of August. 4,931 under contract. You take Philadelphia out of there, active listings are still falling behind pending sales. Really important fact to note. And what we're seeing in terms of the averages and year-to-date inventory, we're seeing inventories down between 10.8 to 15.3%, which is a 1 to 2 month supply right now. So those are big drops in inventory. We're still not seeing that number bubble up. It's getting close. If you look at the numbers of active versus pendings, we're seeing that actives are catching up a little bit, which is something that we've talked about that people would anticipate happening here as we head into the final quarter of the year. So that's a good sign for buyers. And lastly, mortgage rates are coming in less than 3% on a 30-year fixed. Great time to buy. Affordability is higher than ever. These are the lowest rates recorded in history. So what does all this mean? I just threw a lot of data at you there. So a couple key takeaways. Homes are moving quickly. That is a very low number in terms of days on market. So if you're a buyer right now, you better be ready to go out and look at a property that day or the next day. Speed will help you. And you need to find someone that's able to get you into properties pretty quickly. That's one of the key traits buyers should be asking in their agents at the interview process. How fast can I get into homes? What's your backup plan if you're not available? So really important thing for buyers there. Sellers, be ready to move in about 90 days. Right? So if we're seeing the days on market range from 29 to 37 just in the month of August, you figure you need at least 60 days to close. And most mortgage companies can't close quickly anymore. They're way too backed up. There's tons of delays happening right before settlement. So be ready to have to move potentially in 90 days. And again, you can negotiate this out and maybe get a 90-day close, buy yourself some extra time. But that turn time all in is probably averaging right around 90 days right now. So important for sellers in terms of timing. What we're also seeing is affordability is very high. So that's good news for buyers and for sellers because people can spend more on your home right now if you're a seller, and buyers can qualify for more than they would have even last year. If you look at rates where they were, buyers have tens of thousands of dollars more than they did this time last year. So they can afford more without their income going up. That's a big deal. So we have all these things happening right now in the marketplace, and the other thing buyers need to be aware of is be ready to get into a bidding war. Be ready to get into a competitive offer situation. We're seeing that homes are selling very close to the asking price. So sellers, if you're not getting traffic on your property, it's likely a pricing issue. if you're not getting traffic on your property, it's likely a pricing issue because we're seeing that homes are selling very close to the asking price. We've got these really low inventory levels, super low rates, assuming your marketing's being done correctly. And I don't want to ever assume that's the case unless you're working with someone like me, where I know we have a system that's proven and documented. This is something you really need to check on and get real with where the numbers are coming in. And in terms of strategy, the best strategy is to price your home right around where you think it's going to sell for, because that's going to get you the most activity in the marketplace. And also, be okay if you only get a full price offer. It's crazy that we're saying you might need to be okay with getting just a full price offer. Most people will be ecstatic about that. Something you want to get real about in today's market. So less sales, prices are going up, rates are historically low, less time on market. That kind of sums it up. And I gave sellers and buyers a couple key takeaways there. The big thing here is this. If you're a seller and you're thinking about cashing out, I don't know if you're ever going to find a better time to do it. If you're a buyer and you want to lock in a historically low rate and get into a home that you're going to be in for a long time, or just save money by buying a home instead of renting, you can do that with where rates are coming in. So that's the quick breakdown of what's happened through the end of August. Any questions? Obviously, you know where to reach me. There's very specific local data that I'm happy to share. And otherwise, we'll catch you guys next week and keep you informed on what's happening in the market. You're definitely going to want to watch this one.